Okay, guys, let's get right into the stock market technical analysis. We're going to go ahead and look at a couple stocks. We've got Microsoft and Google are reporting after the bell today, so we'll look at those. Look at the broad markets, how those large cap tech stocks might impact the market, and yeah, anything else that's interesting. So as I go along, if you're finding some value in the content, if you are interested in learning this as a skill set, continue to follow along. Drop me a thumbs up. Check out my stock market technical analysis course. Feel free to join up in the private member group. All the stuff is in the link in the description below. Microsoft, they're reporting today. So I don't know which way it's going to go after the bell, but the way that the charts tell me is lower. So here you have clear negative divergence right there on your RSI and PPO. The momentum has been dropping off. So recently on this daily chart of Microsoft, we made a high right here, and then we made a new high, but it was a divergent high, and we did that right ahead of earnings. Divergent highs often get sold into, higher probability to be sold into. So here's how I see it playing out. Really, there's two scenarios that I see are the most likely. One, the earnings come out, the market doesn't like what they hear either in the initial reaction or in the earnings call, and they sell it down. All right, so you just start to move lower. You've got some support right down here. Let me kind of zoom out. Yeah, I think some people are going to see this as support right about 326-ish. So we could just gap down in earnings right down to there. And that would be a move of about 6-7%. That's probably about on par for where Microsoft is going to go on a bad call, at least on just a single after earnings move. So that's one option. Option number two, they gap it up, all right? And they gap it up just making a new high somewhere right above this 367. Probably not too far above it, but maybe just anywhere up to about 370, 371, somewhere right in there. Then tomorrow when the market opens, and this is what you want to watch for to see if it actually comes true, but when the market opens, the sellers step in and sell it down, and you get some sort of a decent sized reversal candle. All right, bearish engulfing, some sort of big reversal candle on Microsoft after the open. I could put even probability on which one it does, but whether it gaps up, I would put high probability it gets sold into. And if it gaps down, I think it probably just stays down. You might have an initial little reaction, but I think it pretty much just stays down. So all of that is built off of this negative divergence here, telling me that we should be heading lower so in the near future. So that's what I've got on Microsoft. And then Google, or Alphabet basically, same kind of look. You've got, we basically just been treading water here, making, diverging, basically negative divergence here. That's a divergent high. We have it. That's kind of one. So again, same kind of look. Could gap up, put in a new divergent high right after the earnings, and then tomorrow look for the sellers to show up, okay, and sell this thing down. Or it could just gap down. Either way, I'm still looking for down prices. So if we gap up, and I'll just goes for both of these, if we gap up and the sellers don't show up, and there's just buyers, and you see more buying actually taking place, then you could burn through this divergence. All right, so that is possible. So you do want to, it's conditional. If we gap up, you want to look for the sellers to step in. If you see that, then that's likely an indication that that's just a divergent high and they're going to sell into it and start to make lower lows. Okay, and if we gap down, I don't expect the buyers. I mean, I think that there will be initial buyers because we're in a buy the dip kind of mode right now. But I think that will get sold into as well. So it'll be sell the rip. As it rips, they'll sell into it. All right. So ultimately, the outcome I'd be looking for is lower prices. And that's primarily built off of this divergent high here on the daily chart. The fact that we've got negative divergence. Okay. And then just flipping over to the triple Qs. Triple Qs is going to go the way that Microsoft and Google report. They make up a huge weighting in the triple Q, so it's pretty much just a reflection of those earnings. So same thing, you have negative divergence. They could gap it up, and I'd expect them to sell into that, or they gap it down. If they gap this thing down, I think you probably gap down to about 366, and then ultimately probably sell down to this trend line. All right. Do we get that in one day? It's possible. I mean, right now that would be about a 5% move. So good, strong. That's a good, strong sell-off move for sure. I don't know if we get that in one day, but I think it could happen in maybe a couple days, basically. So that's what I'd be looking for there on triple Qs. And again, I kind of laid out the condition to look for, and if that condition doesn't show up, then that's, then it's just wrong. It's not going to go down. We're likely going to continue higher. Okay, let's look at wheat, because this one's been kind of fun recently. On wheat, you can see we're still at the 200. Again, I think we're going to consolidate here for a couple days. I don't think I suspect they'll sell into this and just kind of hold it right in this area. That's what I'd be looking for. So, and then after we consolidate for a couple days, we're going to probably go on to move up to this 803, $8 area for the next good major level of resistance overhead. So that's what I'm guessing. I think we just consolidate and then boom, pop up to that next level. Nothing tells me that there's anything different in the charts as of right now. Flipping over to interest rates. Again, just building on the thesis that I think tech's going lower. You can see interest rates rising today and still holding that bullish trend. So rolling out, just to give everyone a refresher, there's your COVID lows on this daily chart. Again, TNX tracks the 10-year interest rates, which most credit mechanisms, most credit products are really mapped to this 10-year interest rate. So credit cards, mortgages, things like that. So you got support, and you got support right through here. And ultimately, we're still holding that bullish trend. So that's it. As long as we're holding bullish trend in interest rates, you should expect to see pressure continue to show up on tech. It's not probable that you're going to have rising interest rates and rising tech stocks in general, and really just the stock market in general. It's not probable. It's possible, just not probable. 3M. Okay, so there's this bad boy again. Pretty much moving how I thought it would. I've got resistance just over here. This just comes off this downtrend line. You got resistance, 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 and they popped it into the 200. I suspect this is gonna, it could come back and backtest. This is support right here at about 107.37, and then resistance is the 200. They could come back and backtest. I do think we're probably going to go up and hit that trend line just overhead. So maybe a little more upside in the short term, possibly a pullback, and then maybe a little more upside. But it's not objective to go long anymore. If you're long this thing now, you want to start looking for areas to take profit. I still see a little more upside, and that still from where we're at, that's still possibly another 3-4%. But yeah, that's still looking accurate. Let's talk about Meta. So Meta reports tomorrow after the bell. As of right now, still a bearish setup. So you've got negative divergence. You got a bearish rising wedge. There's your negative divergence. There's your bearish rising wedge. You have a sell signal. It is right before earnings, so that always makes me a little suspicious to see moves take place right ahead of earnings. So I think it is higher risk at this point. I do still think it's going to sell down because you have negative divergence, but they could pop this thing right after earnings, right into resistance, right up in here. Possibly even make a new high. Pop it up, make a new high like that. Okay, a back test basically, and then they'll sell into it. That's completely possible. So, and I put decent probability that's the case, or otherwise they just gap it down. So, the breakdown right ahead of earnings definitely gives me a pause, and I think it makes sense to probably just lighten up a position. If you're short right now, just be willing or able to emotionally to be able to ride out that move against you, because tomorrow, that's a 6-7% move to rally up there, and if it's going to get up there and backtest, it's very likely going to pop up and make a new divergent high. So I suspect it'll be up 7.5-8% after the bell if it's going to rally, and that would be an objective short because you're backtesting. So again, objective to short on a breakdown and objective to short on a back test. Okay. And that's one outcome. Otherwise, it just gaps down. All right, it's just going to gap down. It's kind of a crapshoot. It could go either way. I don't, there's divergence here, so that tells me if they gap it up, it should get sold into, or it could easily gap down. I don't see a situation with the technical posture of the charts right now that it just goes higher. Like, can gap up after earnings, but that should get sold into it. I don't expect it to gap up and then just continue to build on those gains. Okay, so that is that one. And for the most part, that's it. I'm just scanning around and I'm seeing all kinds of negative setups. Here you've got Airbnb. You've got a nice upward price channel. You've got a lower high in momentum. Not confirmed divergence yet, but you got earnings coming up. So I could easily see this thing gapping down on earnings, confirming the divergence, and initiating a sell signal. So that's that one. Here's one, AVGO. This one, negative divergence is showing up there. On this one, you've got a bearish rising wedge right here. So again, that's set up as well. This one's got earnings. This earnings is out a little way. So if this is going to break down, it's likely going to do it based on one of the other semiconductors reporting. Let's see what NVDA reports. NVIDIA's out a little ways too. So no sell signal here on NVIDIA. Just continuing to kind of move higher within this price channel. So until we get a sell signal, nothing to do there. But we do have negative divergence telling me that a sell signal's likely soon. It could be on earnings. That might be when it actually starts to break down. This one's interesting, Alcoa. So they're a steel company, I believe, or aluminum. This one looks bullish to me. So you've got bullish divergence here, building on the daily chart, on the PPO, and there it is on the RSI. So these divergent lows here, that's a divergent low. It looks like it's building a base, all right? For the next buy signal, you probably want to take out these former highs, maybe something like this. You don't have a real definitive resistance level. So I don't know. You might want to just start taking out some of these highs for the next buy signal. But you see that pop, it should run right up to the 200-day, and you've got resistance just overhead at about right there at 42. We'll just call it 42.30 or so. That's your next level of resistance. And yeah, looks bullish. No definitive buy signals yet. I'm going to go ahead and wrap up, guys. Get this one out. Best of luck. Catch you on the next one.